Good morning, I'm Bill Hubbard, Chief Economist at Trade.com, and welcome to our weekly market review here on Core Finance Television. And I'm honored to have Stephen Pope, Managing Partner at Spotlight Research. Well, Stephen, I know we want to talk about commodities and some other important subjects, but let's start today, just in a few minutes now. The Bank of England has their meeting. Your thoughts on what may happen or may not?
Well, headline will be rates will be unchanged, no surprise there. Perhaps more interesting is how will the MPC have split their vote? Will it be a 7-2, or could the chief economist, Andy Haldane, actually move over to the more hawkish camp? I think that's probably going to send the wrong signal to the UK money markets at a time when the UK economy still looks quite fragile, productivity is low, unemployment's good, but wage growth is weak, and also inflation has moved ahead slightly. And Brexit is that big cloud of uncertainty.
Excuse me?
Brexit, didn't you hear? We're leaving. We're leaving. Much to Mr. Juncker's annoyance. So those factors, I think, would just mean we'll stay at 7-2 on this particular occasion.
Yeah, because I think the market consensus, as is mine, is 7-2. As you just said, would Haldane throw sort of the pigeon among the sparrows, or whatever they call it? Because he vacillates back and forth. And I think the thing is, do you think if he did vote, what would that do? What is your feeling on how Governor Carney would feel about this?
I don't think that the fact he would switch over and vote with the hawkish camp in favour of a hike would mean that Mark Carney would feel too pressurised, because I think he has stated out his view.
Yes.
He's a big champion of the forward guidance and is suggesting that rates will be moving higher at some stage when it suits the economy. Now, we can read into that what we like, but generally speaking, I think that what you've got is Mark Carney is very attuned into the risks facing the UK economy at the current time, the fact that we do have this low productivity, which is a major problem, and I think he doesn't want to cause any difficulties in terms of how the international investment community might perceive UK as a good investment case by suggesting that there is going to be a rate hike sooner as against, say, third quarter of 2018.
Because I know we've gotten very hawkish data the last 2 days. Yesterday, the unemployment rate, 4.3%, 42-year low. We got inflation at 2.9% 2 days ago. But the killer factor is there is no increase in wages. And again, we're also looking at, with each month, certain data, which is either pro or con on inflation, falls out. And so, he basically said, a lot of that was probably the first negative effect from June of last year, when sterling dropped like a stone, and petrol prices, et cetera, et cetera. And again, if you look at expectations, there's only a 12.4% expectation that they'll raise rates, and it doesn't go over 50%, and it's 60.8% for May of next year. My call still is, until we get a better handle on Brexit, they probably won't do anything until August of next year.
And normally we might say that an event happens and you've got to wait 12 months before we can wash that event out of the system. But unfortunately, sterling has fallen continuously since June 24th of last year. And so we've not been able to just get to June of this current year and say, well, we've negated that effect now, it's out of the system. It's ongoing. So we're probably not really going to find that we've fully flushed the sterling depreciation out of the system until maybe March of 2018.
Yes.
And in that regard, I don't think there's any real reason for the Bank of England to start.
I agree. Because I think, if you've looked at the CFTC data, the major move from 128 to 132 plus has really been, but 3 months ago we had as large a short as we did against the euro. We saw the euro move to above 120 and the sterling at 132. But I think it's a situation where, I think the market really is not going to look until at least the November quarterly inflation report. So, I think the market basically will say, thank you very much, 7-2, and so we go. So now let's get back to, again, what is causing this? And we all are going to think about the commodities, okay?
All right.
So let's look at the first chart here, okay? Again, what about crude now? Because we saw the dramatic fall in crude, first with Hurricane Harvey, and then with Irma. Now we're starting to see a slight recovery.
Well, I think, as we've often discussed, that oil is one of those commodities that it's a victim of its own success, in that any time we want to see an improvement in the spot price, it's just going to aid encouragement to marginal rigs in the United States to be considered as becoming economically feasible. And what I think you can see here is that really since around June, July of this time, spot has been trapped between the 200-day and the 50-day moving averages and has not really shown much inclination to break above or below. When it has broken below, it's come back very quickly. And my sense is that oil is going to stay at these levels. I can't see it moving much above 50 as a flat rate until we actually get to a point.
Well, the driving season in the States effectively ended last weekend anyway.
Yeah, that's right. And so I think that what you'll find is there is some concern that maybe certain refineries have been knocked out a little bit by the recent hurricanes. Well, they'll come back, not really a problem. And we now know that the Saudis are talking with various other OPEC members about extending beyond March of next year in terms of reducing production. But whilst they're doing that, Nigeria is ramping up production. So whichever way you look, oil is coming under pressure. Now, any gain may have come through because yesterday there were 2 reports suggesting that oil demand will grow next year. Now, one report came from OPEC. Well, maybe it's OPEC just talking their own book.
I was going to say.
I would pay more attention to the International Energy Agency in Paris. Now, they did say there'd be an increase in growth, but as we've said before, so what? If there is an increase in oil demand, there's plenty of oil in the reserves,
You just
and there's
mentioned about
plenty of
the rig
sources to
count.
get new oil.
I think that's the next chart we've got here. Okay, and as you see, it's only gone really one way. Now, it's sort of plateaued here. But one of the interesting things, and going back to the Bank of England, we were all warned by the Automobile Association 4 weeks ago, reference to Harvey, and again, the Gulf Coast, et cetera, prepare for like a 4 to 6p increase in petrol prices. Well, we got those, you know as well as I do. And we saw severe price gouging. So we could see, going back earlier, you talked about, we could see sort of, an artificial inflation impact this month.
And I'm sure that not just in the United Kingdom, but across many countries, you'll find that those price increases that did occur might be a bit sticky to come back down.
Well, don't they say it's always easy to take them up and very difficult to bring them down?
Absolutely right. And here we've had this chart where we've discussed before the plateauing effect because we'd reached almost the maximum efficient economic scale for the rig count. Now, we do know that there are other rigs that could come online if oil was to raise itself up to, say, 55 or even, dare we say, 60. So that could move up in that regard. But generally speaking, don't pay no worry to this fact it's turned down. That is not because the technology is exhausted. It's just there was this impact coming through from Harvey and then mostly Harvey because it was in that area of the United States. But those are coming back online now because Harvey dissipated and faded away, and the other impact from Irma was more on the Floridian side, not in the oil-producing territories. So what you'll find with the next chart, where we look at the percentage week-by-week movement, is that we did plateau, and we went to a below zero incremental increase. However, with more that we switch back on and recover, that line is going to move above the zero.
I think this is very interesting, okay? With President Trump being inaugurated on the 20th, the one thing he said was a $1 trillion infrastructure, okay? And shale oil fracking, et cetera, et cetera. So you saw the dramatic increase, a massive increase there.
That's right. But then again, that took it to that sort of plateau peak level of good economic scale. Since then, the marginal increases week by week have declined. Now we've seen some reversal, but that reversal is purely down to the effect of Hurricane Harvey. But those reversals will be unwound, and so we, in the next few weeks, will be pushing up to around a 0.5% gain on the week.
What do we have next? Gold? Well, again, as we saw this, several weeks before Harvey and Irma, everybody was talking about safe haven, and we saw a massive move in both yen and Swissy. And of course, again, gold has always been the proverbial safe haven, okay? I think this morning was 1,320. That seems to be the exact same price of cable. Have we temporarily peaked here? Because, Kim Jong-un didn't fire off a missile on the 69th anniversary, okay? Geopolitical risk seems to be at least settling down right now. So it's just a situation where we'll have buying and selling.
Yes. Now, what could possibly be the next turn for gold is that I think we got a little bit overvalued on the prospect that the North Koreans were going to do something really stupid. But I wonder if behind the scenes there's been some whispers telling them to calm down, don't be ridiculous. However, what you're going to find now is that this gold price will drop off. That will lure one or two buyers back into the market because I think it's cheap in relative terms. But we are coming into...
In relative terms, dollar terms or versus the gold-silver relationship?
Well, I think just in terms of dollar, because gold silver seems very comfortable, just meandering along in a range. It's improving, but it's not very much at the current time. And then what I think you'll find is that we're coming into the traditional sort of Asian festival season, mostly in India with Diwali, where a lot of gold will be bought for weddings and various jewelry products. So there might be a short-term lift, but much of that gets factored in already. And there's plenty of gold reserves within those Indian jewellery markets. So I think that we probably do see more of a chance that as those tensions have cooled down somewhat, that we'll bring this back down to around the 1290 territory, which might be placing it somewhere toward where the 50 and 200-day moving averages are. They'll come back into the sphere of orbit for this spot price now.
Now, I think the next one is... what is BTC USD?
Something that people might call fraudulent.
Yes, we were talking about this last week. I think, where do we go from here? Down further?
Yes, I think this is a situation where it became hyped up beyond all comprehension, vast amounts of large-scale mining activities being put online. But what you've seen is that the powerful state agencies have turned around and said, we do not trust this because we're going to ban online exchange of Bitcoin in China. Now, I would look at it and say, what is the definition of money? It's a medium of exchange. Well, yes, we know one can use Bitcoin for that in certain areas of the global economy. It's a store of wealth or value. Well, it looks more like a store of pain and volatility that could be excruciating if you're on the wrong side of it. But then it's also, money is meant to be a unit of account. Now, with something like sterling or the dollar, there is a place of account to go to, the central banks. But here, accountable to who and to whom?
Yes.
Where is the point of recourse? And so I think this has moved up aggressively. We did say last time we discussed it that 6,000 was a distinct possibility. Now, with various comments coming through from the Chinese authorities as to no to on mainland China exchanges, the prospect that the North Koreans have been hacking data mining operations in the south, plus the fact who are the main state users of this? It's those nations that have got nowhere else to go because they're excluded from so much of the world. So you have North Korea, you have Venezuela. Then I think offset, we were talking about that currency restriction that took place in India. And so this has filled that void to an extent.
Because I think if you have missed it over the last 48 hours, Jamie Dimon, chief executive of JP Morgan Chase, basically reiterated 2 days ago what he said in 2015. It's a fraud. It's a sham. It makes the tulip mania of the 1630s look like a great idea. And he basically said that any of his traders involvement with Bitcoin would be fired on the spot. Since his comments, and since, as you were mentioning about the People's Bank of China, quote, outlawing ICOs, we've seen Bitcoin drop from 5,100 to 3,470. So we've seen almost a 35% drop. So, again, if you look at it from the movement it's made over the last 7 years, 1,000%. But how many people got in it? $300 or $400, okay?
Indeed.
They got it. And so the simple fact is now, at least $20 billion has been wiped off the value of it. And another thing, again, it was an article in the Times yesterday talking about an ETF out of Australia, okay, that went bankrupt on Monday. They've lost 90% plus of the 25 million that they had. And again, it said the Times reporter tried to recall the number, which was in Kuala Lumpur, but nobody answered. So, I mean, it's a situation where, right or wrong, what you're hearing now is the negativity come out. And again, Mohammed El-Arian, who used to be a client of mine when he was a trainee at Harvard Management in the early 80s, and of course made his fame with Bill Gross at PIMCO, basically said yesterday just exactly what you said. It's probably worth, if it's worth anything, it's probably only worth half of what it would be worth, and that would be not even 2,000. But as he said, it's more of a people-to-people, person-to-person. And he mentioned the same thing, which two other people have mentioned. If you're living in Venezuela, India, where the economy is, it's very difficult, that is your medium of exchange. But you're not spending billions. Maybe you're spending 10 bitcoins to buy some food or milk or something like that.
Yes, I mean, one of the things that you've got here is that it is
Let's look at the next
it's a
chart
fixed
here.
supply of
Yes.
money. And so when there has been that excessive demand, and it was a shift in the demand curve, not just
Yes.
an extension along the curve, an actual shift of the curve. That's why that price took off so aggressively. But there is very little depth in this market, and that's why Mr.
Yes.
Diamond was absolutely correct to
Yes.
make those points, that if you can't understand it, then there's something funny going on. And if there's something you don't understand and it smells funny, it's best to still wear clear.
Very briefly, okay? I'm registered in the States, New York Stock Exchange, Series 7, Series 11, and Series 64, okay? When I took the first exam in 72, okay? Let me tell you what the first question was. What is the meaning of caveat emptor? For you people who are not Latin scholars, caveat emptor means buyer beware. And as we mentioned earlier, I mean, say you went in at 2010, 2011, 2012, well, nothing happened, okay? And then all of a sudden, you've seen, really, it's only been in like 2.5 years that everybody has gotten involved with it. And as you can see, if you want to call it the real killer, and as I say, anybody who owned Bitcoin, I sort of hope they sold before the 1st of September, because I mean that's where it's just been.
My worry is that people were involved here. Nothing happens when they got out. Then just around the end of 2013, it spiked up. So people may have been drawn back in, and then they've lost, so they've come out. It's flatlined once more. Then it starts picking up from the mid of 2016. People maybe went back in, and they've enjoyed this ride. But my goodness, you're talking about a drop of approaching 35%
Yes.
in a matter of days since the month began.
And we
Then
still got 2 more
suddenly-
weeks.
That's right. And so suddenly, it's not just that you've lost quite a lot of money from your paper accounts.
Yes.
Also, the volatility is excessive. So I think it's a real concern. And maybe those bigger management funds who are contemplating, let's set up a program based upon cryptocurrencies, they might want to rethink that, because they can't really go to their investors and say, well, we have all these splendid assets in this crypto bit, Bitcoin or Ethereum or whatever it might be, but the volatility is just unmanageable.
And also, we talked about this before, is that until we have approval, and again, the first name I mentioned was the People's Bank of China, because I mean, that's where most of the activity seems to be in Asia. But I mean, you saw what they said. We've had nothing from the Bank of England, nothing from the Federal Reserve, nothing from the legitimate banks. So I mean, it's a situation where I am a member of the school that, I understand houses, I understand bonds, stocks, etc., because there's an underlying security. And one of the things we were talking about before, when both of us started in the marketplace, Thursday was what everybody stayed around for, and it was the monetary aggregates. And this is what the banks check on a daily, hourly basis. Is there more money in this system? Is there not enough money in the system? And we do repos and reverse repos. Now, I haven't heard from the producer, but I think we may be running a little. But last point. If you're looking at Bitcoin, or forget Bitcoin, I will have to say that I do feel, not today, not tomorrow, but sooner rather than later, we will get a cryptocurrency or a digital currency. I mean, that is the way to come, okay? Maybe it's not now, and I think maybe it has to be approved by officials rather than some secret Japanese man that we don't even know even existed.
I think the thing is, though, we all groan and moan about regulators and the restrictive practices of the law at times. But the laws are there for a reason, to keep us safe. And the regulations regarding how a specific state-issued currency, dollars, sterling, euro, how those are governed and how they're accountable are there to keep us safe. And I come back to that third point about what is money. It's a unit of account, but accountable to who? If you're involved in Bitcoin, who do you go to if you get harmed and damaged? And that's when there's going to be a major outcry. So buyer beware.
Stephen, thank you very much for joining us. Have a lovely afternoon, and we'll see you next month. And thank you very much for joining us at trade.com here at Core Finance. Thank you.